Welcome back to the channel, guys, your home of hopium-free crypto and economic market cycle updates. I hope you're having an amazing day wherever you are around this beautiful planet of ours, and that you've smashed out a gym session and got your favorite beverage to get straight into this video. Today, I want to look at all of this insane volatility and news that we are anticipating for this week, break it down nice and simply, and make it a nice, succinct, quick video for you guys, because we've been covering this for the last several weeks in terms of price resistance, support levels, and looking at this on a more macro frame. If we want to understand where we're DCAing into Bitcoin, when is it time to be buying cryptocurrencies for the long term, and of course, there's also the short-term opportunities for trading cryptocurrencies. So if you enjoyed yesterday's video with that little bit of mismatched editing, come on and hit the like button and subscribe down below if you haven't already. All right, guys. Let's start with the old thing that everyone is looking at today, the Jackson Hole Symposium. I'm not going to spend a ton of time on this. As with all major news announcements, it really comes down to what the trend is in the market. And you know we've been covering this for many days now, so let's not drag it out too much longer. The meeting started Thursday and Saturday. Powell is speaking today, probably in a few hours from now. And then the next major event that everyone will be waiting for is the Fed's meeting in September. Little note here, these are beautiful dates for Gann analysis. These are basically Gann seasonal dates. This is the equinox, solstice, basically the quarter where the seasons change. That is going to be a big time, I think, in the markets, and it's around the ETH merge as well. So if we are getting a little bit of a downtrend in the market, I dare say we're going to be looking out for those particular dates in about 3 or 4 weeks' time. So we'll keep up to date with that and see if we get a nice big turn in the market around then. The fear and greed is also something to note here because, you know, we're coming up to big events today. Is the market fearful? Are we more greedy? Well, we're basically in the fear zone, and yesterday we were in extreme fear. But remember, we've covered this multiple times. We're using it as a buy and hold strategy for Bitcoin, but we're also looking at this from previous videos, looking for this in terms of resistance and support levels. And eventually we were going to break out of the support zone for the fear, and we were looking for a rejection at around 40 to 60 points on the fear and greed chart based on historical data that often when we come up to these levels and we're not in a raging bull market, then we do tend to see some sort of rejection at these levels, which means the market was getting a little more greedy. We're getting a little bit more comfortable with the prices, market prices going up. Let's go this way, right? But then if we look at the emotions of people, there has to be a resistance point eventually for that correction. And we basically got there in the last couple of weeks. This week and last week, we were just basically topping out, and now the fear has started to come back into the markets. So that's what it is right there. And you can see from the past, it tends to be around the 50 to 60 with the odd occasion at around 40, especially if we've been fearful for so long. So there was no questions about it that we had to have a turnaround. So what does this all mean for the rest of the market? Well, what I'm seeing is that this could just be a bit of a volatile, tiny period looking at the prices themselves. What does that even mean? It's a small volatile period. Well, for me, anything that is within this range of about 3,900 points on the S&P, and we'll look at Bitcoin as well, between 39 and 4,300 points, which was the top that came in 2 weeks ago, then it's basically a non-event. This isn't really telling the market anything. We get a little bit of a wild swing. What we've seen in terms of news headlines is Powell might not tell us what we actually want to hear, you know, gives us some bad news. Honestly, if these prices stay within these zones after a close over the next sort of 1 to 3 or 4 days, this is in terms of the trading days, then it's basically a non-event. The market is trying to turn down at the moment for the S&P. We knew this was happening. You guys that are following, we're just basically counting weeks here. And the time frame for that, coupled with the time frame for the market sentiment, how long people can actually drive greed into the market, coupled with prices, we ended up with an overbalance in price. This is confirmed. We ended up with an overbalance in time. So we're starting to get a nice push to the upside in a sort of medium, potentially macro time frame. So the medium's looking all right, but there has to be pullbacks. Timing ran out, meaning we've had enough time up, and now we've started to push back down. So I dare say if we stay under 4,230 points on the S&P today, then we'll probably come back and test some of these previous zones at about 39 to 4,000 points on the S&P. which then, because crypto and Bitcoin are closely aligned, we'll probably see a similar sort of thing for cryptocurrencies, but it might not fare as well for crypto because Bitcoin hasn't risen as much as the S&P for now. So we looked at this chart yesterday just in terms of a range. I think anything within this zone is going to be, in a macro sense, basically a non-event. Now I say that kind of blatantly, but I think some people might take it the wrong way and say, you're absolutely crazy, this is the biggest thing ever. You know, it's all of the heads talking around a table together about our financial future with CPI and inflation and you name it, just add something there that's a bad news. But honestly, I'm following what the money is doing in the charts, and right now everyone is sitting on their hands. Volatility has been next to nothing. The price range has been from, in terms of the candles, from the top to the low for the full bodies for the last 4.5 days, has been less than 1% movement within those candles. And overall, this is only a daily chart. If we go back to something a little bit more macro, the weekly hasn't done that much for Bitcoin from bottom to top, 43%. It's just in this little range. 43%, I know sounds like a lot in a traditional market, but we all know here in crypto that it's not that much. The good news at least is that we are holding up on the 50 at around 21,400. We have our support and resistance flips at around 19 to 23K, and that's on the macro scale here. And so anything under about 18.5 to 19K is going to send Bitcoin back down to 17K. That's what I'm looking at here for the sort of short to medium term analysis. You can see the lows here on the chart. You don't have to be too skilled to read a chart there. You can see these candle lows and then the wick lows at about 17.5. The thing that needs skill is to understand that if the market does break underneath those areas, the probabilities increase for a test to the downside, which then causes more strain on that 17.5K sort of current support level, which would probably open the doors to lower prices, 16s, 15s, 14s. We're not there yet, but it's something to keep in mind because so far we have failed to reach the Wyckoff bullish flip price of 26,900. We've tested it once. If we fall under, bigger chance to go further. If we can't hold at this level, if we can hold at this level and start to rise above 23, then we start to mount the next challenge towards that 25K. Another big announcement, something that we've followed extremely well on the channel, even through all of the bullish greed around Ethereum and the merge coming up, we've been following the timeframes on ETH. We've so far hit it on the head because we can understand what's going on in the charts here. I've got MEXC Global open here. You guys saw this on yesterday's video, so I've left a link in the video description for this. All English-speaking countries can access MEXC, up to $1,000 of sign-up bonuses. That's down there. Let's have a look at the chart here, just to give you an idea of the platform. This is Ethereum BTC. We're still holding up. Anything underneath about 7.3% is probably going to spell much lower prices, at least test 6.5%, if not a little lower. But if ETH can hold up above 7.3 and above these highs for the short term around 7.6, we might get another attempt at 8%. So this is ETH BTC. That's why we're looking at in terms of 8%, this number right on the side here. For now, I think we still might have a little more time to roll over, especially if the S&P is looking a little weak. If the news is, of course, not so great for the rest of the market, and of course, if Bitcoin starts to roll over as well, that will most likely send the rest of the market down. We just got to weigh up all of these factors. I don't think it's time to rush in just yet. I'll be looking for that bottom. I'll be looking for all those signals that we talk about here on the channel in terms of our volume, volatility, price patterns, time frame patterns. So make sure you've stuck around with the subscribe button and the bell notification icon. Like the content up. Check out the links in the video description for MEXC, $1,000 there. And of course, our free newsletter is coming out next week. Link to that is also down below. Thanks again for your time, guys. Nice, quick, succinct video, under 10 minutes. I'll see you at the next one, or on Instagram for a Q&A this weekend. Links, as always, are in the video description. Till next time, peace out.